Hello everyone and welcome to our channel. In today's comprehensive guide, I will be walking you through the essential aspects of the discount buy product on the Binance exchange. Together we'll break down exactly how this financial tool works and analyze precisely why it offers such an interesting and compelling opportunity for new and experienced investors alike. Now, this product, just like the name suggests, gives you the chance to buy BTC or Ethereum at a discounted price, well below the current market rate. The two main options available right now are BTC and Ethereum, but it's not just about a simple discount. To really get how it works, I'll walk you through the details with a live example. So let's imagine you have some cash ready and you're looking to buy BTC or Ethereum. For this case, let's say I want to buy Bitcoin. The platform is showing me the current spot price right here. For our example, we'll use a price of $118,427. Okay, first things first, let's break down how to read this page. You see the trading pair here is BTC/USDT. The target buy price is the specific price you're aiming to buy the crypto at. Of course, you could just place a regular limit order at a lower price, say $117,428, but this is where the system differs. The key difference with this system is the expiration date you see here. For this one, it's 3 days. By putting your money into this product, you're setting a commitment to buy at your chosen target price. Then, if the conditions are met on that expiration date, the system automatically executes the purchase for you at that price. Alright, so for instance, when I go ahead and click the subscribe button, this screen pops up. Here in the amount field, you just type in the stablecoin amount you want to invest. The system then summarizes the subscription. My target buy price is to buy Bitcoin at $117,428. Your knockout price level, which represents the upper boundary for this particular deal, is firmly set at $122,000. The summary shows that if the purchase doesn't execute successfully for any reason, you will instead be offered an APR 30%. You can also see the exact expiration date and the settlement time listed. So the big question is, what happens at expiration? There are three possible scenarios. Let's say the expiration date is August 1st at 8 a.m. UTC. Okay, for scenario 1, let's say at expiration, the price of Bitcoin is below your target buy price. For instance, it's lower than $117,428. In that situation, the system will use all the money you invested to buy Bitcoin for you at your locked-in target price of $117,428. It's important to note, in this outcome you won't earn any APR. Now let's move on to scenario 2. What happens if the price of Bitcoin has rallied and at the moment of expiration it's trading above the specified knockout price? In our example, that would mean anything above $122,000. In this situation, you don't get to purchase any Bitcoin. Instead, your initial principal is returned to you along with the full promised APR, calculated based on a 30% rate in our example, all paid back to you in stablecoin. Now let's explore the outcome where the settlement price is between your target buy price and the knockout price. For our specific example, that means the final price lands somewhere in the range between $117,428 and $120,000. Under these circumstances, the rules of the product state that exactly half of your total investment, a clear 50% of your principal, is used to successfully buy Bitcoin at your predefined target price, ensuring you acquire some of the asset. The remaining 50% of your principal, along with the accrued APR for that 50% portion, is returned to you as a stablecoin. It's also very important to remember that once you subscribe to this product, you have no right to cancel, modify the transaction, or withdraw your money until the expiration date. In other words, your funds remain locked for the term you have chosen. So to summarize, at expiration, you either buy crypto at your target price or you get your principal back plus APR. The main risk is if the market price drops far below your target, you'd effectively be buying it at a higher than market rate. As you scroll down the page, you'll find the different target buy price and knockout price options available. You'll notice there are actually multiple pages of these offers. It's a good idea to click through them, as you'll find a wide variety of target buy prices, knockout prices, and the associated APRs. This flexibility allows you to explore different options and choose a strategy that aligns perfectly with your own market outlook and individual risk tolerance. And keep in mind, everything I've explained so far doesn't just apply to Bitcoin, it applies equally to Ethereum as well. The entire process, including all three possible scenarios we've discussed, functions in exactly the same way when you're dealing with Ethereum. So that pretty much wraps up this guide. If you found it helpful, don't forget to leave a like and subscribe for more content just like this. Got any questions? Feel free to drop them in the comments. Goodbye.